Hello everyone, and welcome to this morning's educational presentation. Now today I'd like to speak to you about a simple strategy to trade pullbacks. Pullbacks are a very popular way of trading, and I'm going to show you one of our most consistent methods in which to trade pullbacks. For example, let's look at this chart here in the spiders. This was coming back to the first week in March, or this past month. Now, someone looking at this will say, well, there's not enough information, nothing's really happening until this, where we started a downtrend. Or it was assumed by a lot of people that perhaps we were in the beginning of a downtrend, because if you look at the last 4 out of 5 bars, we all closed lower. We're making lower lows. So this is pretty much the definition of a downtrend. Most people would look to short the spiders. This is the ETF that represents the S&P 500, or at least get out of the market altogether. When in all actuality, the strategy I'm going to be sharing with you today, the entry rules, which is strategy number 1, would have generated a buy signal right here on the 8th of March. And as you can see, the market went up around 8 points on the spiders, which represented close to, I believe, 700 points in the Dow. So you're going to get the entry rules to this, and we're going to show you how easy it is to actually implement on our platform. This is the platform I developed with Pro Trader Strategies, the PTS Primo charting platform. This is the educational portal that makes pullback trading simple. You're going to see exactly how simple it is to implement this method. So welcome once again. Thanks for taking time out of your Saturday morning. My name is Steven Primo. I'm the president and founder of Specialist Trading. I teamed up with Pro Trader Strategies with one goal in mind, and that is simply to educate traders. We are first and foremost an educational company. We simply want to educate you so that you can be in charge of your own trading decisions. This is the one thing, the major thing, that is most likely missing in all of your trading plans, because you're most likely relying on someone to tell you how to trade. You're going to a chat room or watching a so-called guru on TV, or someone telling you what to buy or what to sell. And this is the reason, in my opinion, why most traders fail, because you've basically taken yourself out of the process. So our goal is simply to educate you with simple things that have stood the test of time so that you can be in charge. And once again, get back to being that consistent trader that I know you would all like to be. Now, I've been trading for 42 years now. I've seen and traded just about everything you can imagine. I started out on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of them I was a specialist. That just means a specialist is someone who made markets in about 50 or 60 stocks. So I've traded every environment, every system, every technique you can think of. Even if it's something that is a so-called new method of trading, it's been around before, most likely. It's just been rebranded or just formatted a different way. So I've traded it. I know what works. I know what doesn't work. And so I can teach you the things that have a high level of consistency. So why waste your time and money searching for that holy grail when it's probably most likely right in front of you? So today's promises to be a great educational presentation. Once again, I'm going to teach you the entry rules to one of our most consistent pullback methods. But as always, before we begin, we are required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results in a lot of different markets and time frames using strategy number 1. But please remember that we can in no way guarantee that any of the actual performance records I'm going to be sharing with you will be repeated in the future. And please remember, once again, since we are an educational company, that all examples are strictly for educational purposes only. And also, if you haven't done so already, we have a nice sized crowd here today, a lot of new faces. Feel free to follow us on Twitter. I post different information on a daily basis, anywhere from signals our strategies have generated to little bits of financial wisdom. Lots of educational information, free educational information. So feel free to follow us on Twitter. There's our handle right there. You may want to copy that down. Abbreviation for Specialist Trading, it's at SPCLST-TRADG. Okay, so once again, we are a little bit different from other presentations you may have gone to in the past, in that we're not going to tell you that, oh yeah, we have a method that never fails. In fact, we've only had one loss in the last 5 years, or that we can generate so much percentage points in our methods and our trading per month. We don't believe in that, because that requires, in order to get those statistics, in order to get those numbers, that requires you to basically, once again, take yourself out of the game. You have to be following a plan where you have no say, you have no input. You're basically like a robot, because that's the only way you can come up with those numbers. And trust me, I've traded systems, I've taught systems in the past, and every one of those systems has ultimately failed. They've given up everything. In fact, they had amazing numbers going back 20 years with really small drawdown, very high win-loss ratios, tremendous amounts of percentage wins. And guess what? Every one of them blew up and lost the minute the environment changed. So you have to be a part of the process to be able to change and alter things when the environment changes. So as you can see here, my goal is not to force feed you some system. My goal is not to tell you what to buy and sell on a nightly basis. We totally don't believe in that. But my goal is to teach you how to trade with the specialist edge so that you can be in charge. This is the same edge that I was taught some 42 years ago and what has sustained me for this amount of time, and hopefully we'll be able to do the same for you. Now, since this is an educational presentation, once again, we want to take each and every one of your questions. I know you'll probably have a lot, but don't worry. Just wait till the very end of class to ask them. I promise I'll get to each and every one of them, but please, if we slow down the process for every slide and ask a question, we'll be here way too long on a Saturday morning. I don't want to take up your entire weekend. The only question I will answer is this, and that is this being recorded? Yes, it is. So if you have to leave early or if you're having technical issues, many times if you have a problem with your sound or you can't see the screen, just log off and log back on again. Oftentimes it's your own internet connection. But if you still can't see or hear me clearly, don't worry. We'll send each and every one of you a link to this recording, okay? So not to worry. All right, with that said, let us begin. We're going to be talking about a great pullback method, one of our most consistent methods, one I've been trading for a long time. This is specialist trading strategy number 1. Okay, so let's talk a little bit about some of these highlights. And remember, we're only going to give you the preliminary entry rules. It would not be fair to all of the people around the world. We have students in over 115 countries and in virtually every state in the United States that purchased our strategy number 1 course. They say, hey, Steve, wait a minute. You gave away the whole thing for free. Why did I buy this? So we're just going to give you the entry rules to this. But that's pretty much the majority of what you need to know. If you have any experience in trading, you'll come up with some idea of where to place a stop and where to exit, okay? All right, so the highlights. It's a pullback strategy. If you're not familiar with what a pullback is, just think of it in this terms, all right? So if you have an overall uptrend, if the market is going up, very rarely do you see things go straight up. Every day it just goes higher and higher and higher. Usually what you have is a nice run up, and then you have a little sell-off or a little decline in price within that overall uptrend. A pullback trader looks to buy on that decline before it resumes going back up. It's the same thing if you have an overall downtrend. If the market is going down, very rarely you see things go straight down. You have a little bounce and then it goes back down again. So a pullback trader is looking to sell in an overall downward market at higher prices. Okay. Now the way we do this is by applying a unique Donchian channel application. Now Donchian channels are a very common tool. You can find them in just about any trading software package or platform. If you don't, ask your tech support at whatever platform you're using. They should be able to find it for you, or you should be able to find it for free on some free websites I know that have charting platforms online, okay? Now you can apply this to any market, any time frame, in any direction. The majority of the snapshots I'm going to be sharing with you today are in stocks, but I'll share with you some E-mini, some currency pairs, even some commodity examples later on. As with all of our methods, we always ask our students to paper trade first. Okay, there's so much more you can learn about trading from paper trading. Think of any endeavor, think of any career. There is no one process where you just jump in and you don't practice, you don't rehearse, you don't study. There's always a process where you have to get the information under your belt and you have to practice a little bit. Think of any athlete, any entertainer. They never just jump in and start doing things. They always have to rehearse, have to practice. It is entirely the same with trading. You have to practice first. And in trading, we call that paper trading. So please, paper trade until you fully understand the process like the back of your hand. Our edge here is consistency. So what does that mean? It means that we will have losses from time to time. That's okay. Don't worry about it. Yesterday when I was trading, I had my very first trade was a loss. Okay. Now, if I had given up and done like so many other traders do, I would have said, this doesn't work. I would have gone in the corner and licked my wounds and said, how come I always lose money? But my next 2 trades were winners. So that's what we mean by consistency, a 2-step forward, 1-step back approach. Okay. You will have losses. That's okay. What you want to do is have the confidence in your method to make back and recoup those losses. And strategy number 1 is a perfect example of that. Okay, so here are the indicators. We're going to be using the standard format, the basic format, which uses a 21 period Donchian channel. Okay, now this is once again a very common tool. If you don't have it, ask your platform that you're currently using to apply the Donchian channels, and just whenever you can edit it. Sometimes they have it formatted to 25 periods, some are edited to a 20 period. Simply go into the edit box and change it to read a 21 period. That means that's the amount of bars it looks back to come up with calculations. Okay. All right, so here are the rules. I'm going to go over these quickly because it's been my experience in teaching for the last 15 years that most students get confused by a lot of the wording in things because, you know, we're more visual as traders. We like to look at charts. We like to look at examples. And so I'm going to read these really quickly, but you'll really fully understand it once we see the charts, okay? Firstly, once we apply the Donchian channels, we want to see that all three Donchian channels are headed in the same upward direction. Okay, now you notice here I didn't say they're in sync, they're headed in the same upward direction. Now we're going to look to buy. This is where it gets complicated in a word format, but we're going to look to buy when we see price start to decline. Okay, and when price declines, we want to see the range of a price bar entirely below that middle rising Donchian channel. We're going to label this our setup bar. Now, does this mean we buy at the market? Well, no, they're not the basic format. Eventually, you'll be able to do anything you want, but you have to learn this basic format first. We're going to buy one tick above that setup bar, okay? Remember, always paper trade before applying real funds. That's how you really learn this process. So this is all being recorded. Don't worry if you didn't understand that. I'm going to show you a lot of slides, and plus we'll send you a link so you can always review this at your own pace and at your leisure. All right, so let's look at a slide because it'll all come into play a lot easier. Looking at this generic chart, and we specifically made it generic because strategy 1 can be applied to any market, any time frame. So I didn't want to put up here that perhaps this was Apple, or maybe this was a monthly chart of Facebook, or maybe this was a tick chart of the euro dollar, because it doesn't matter. You see, students get so fixed on thinking, well, wow, that's a great example in the E-mini futures, so I guess it only works on the E-mini futures. No, it works on anything. So that's why we specifically made this a generic, non-titled chart. Okay, so looking at this, okay, we had a nice little pause here, and then we had a nice upward move. Where would have been the most opportune place to purchase? Well, obviously down here, because since this is an overall uptrend, we want to buy somewhere around these levels. Okay, but how could we have done that? Looking back in hindsight, sure, this is where you always want to buy on this little sell-off or pullback before we resume the upward move. But how could we have done that? Well, we apply the 21 period Donchian channels. Okay, these are what the Donchian channels look like. They have kind of a stair-step approach in the top, middle, and bottom channel. Now remember, we want these to all be headed in the same upward direction, but that does not mean that they are in sync, because as you noticed, we have the top line going sideways. We have, as it's going sideways, the middle and the bottom are headed upward, so they're not in sync. Well, someone would say, well, Steve, so that means that they're not headed in the same upward direction. Yes, they are. And the way to notice that, if you get a bar that's going sideways, just look at its previous setting. If its previous setting was at a lower setting, well, then you know it's going up. Even though you've been going sideways for a while, the previous setting was lower. So you're still headed upward. Okay? All right. So as price starts to head up, most likely it will touch the top Donchian channel. Okay? So this is what we're looking for. This is the rise in price. But once we, have kind of run out of steam, we start to sell off, okay? This is what we're looking for because this is the pullback. Price is pulling back to a specific level. Now, as it pulls back, it sells off. It starts coming closer to the middle line. It touches. In fact, it even intersects, but that's okay. What we want to do is find a bar that is completely below, like right here. Now, as you see, it's below. These are still in an upward range. They're still moving upward. So this will be our setup bar. All right. Now, does that mean we buy at the market? Well, later on, once you become more advanced, sure, you can do anything you want, but the basic format is we buy one tick above. Okay. This is where you're going to be buying, where this green horizontal line is. Now, as we see here, the next bar is a little bit lower, and we never trade one tick above. But guess what? The Donchians are still headed in an upward direction, so now we can move this entry point down to this level because this is the new setup bar. And you can see you can still continue to track it as long as the Donchians are headed in an upward direction. Now, ultimately, you would have purchased because it traded one tick above. That would have been your entry. And look what happened. The pullback had ended and the upward trend resumed. Okay? Once again, obviously, you can say, well, Steve, where do I get out? This is great. Where do I place my stop? That's in the full course. And we have multiple places for exits. We have multiple places for stops. We even have multiple entry points as well. But I'm giving you the basic standard entry. Okay? Now, a lot of students have problems with this because they say, well, Steve, I see that when you entered, it closed above that kind of dashed green line there. Okay, does that mean I wait for it to close? You can if you want, but the standard format just requires that it trades there. So you're going to see many examples that I'll show you today where it actually trades here, but then closes lower. That's okay. All you want to see is that intraday it trades there, and that's your entry. All right? Now, these are the sell rules. They're just the exact same thing turned upside down. I'm not going to read them. I'm going to go on to the slides again because, once again, students perform much better when they see a visual aspect of what I'm teaching. So this is here for your records on the video. Let's go to the slide. Now, obviously, starting up here, we had the beginning of a downward move, okay? So the overall trend is down. Looking back in hindsight, where would have been the most opportune place to sell? Maybe you wanted to buy puts. Maybe you actually wanted to go short. Maybe you're selling a commodity or a currency pair or a future. It makes no difference. Where would have been the most opportune place? Well, right here, obviously, at the top. That's where you want to get out, right? Or that's where you want to sell. But how could we have done that? Let's apply the 21 period Donchian channels, okay? Now, in order to take advantage of selling here, we want to see these Donchians all headed in the same downward direction. As you can see, they all are, even though they're not in sync. Because look at the bottom line. The bottom line is going sideways. This is where students, once again, have difficulty because they say, well, Steve, if it's going sideways, then it's not headed lower. Well, yes, it is. It's got to be coming from someplace. And where was the last setting? The last setting was higher, okay? So that means even though we've been going sideways for a while, it's still coming from a higher point, so the direction is lower. And these are going lower as well. So all three Donchian channels are headed in the same downward direction. That's telling us that we're not going to look to buy, we're looking to sell because the overall direction of the trend is down. Now, as price goes lower with this downtrend, it often hugs the bottom Donchian, as you see right here. See how it's touching that? But once the momentum leaves to the downside, we start to have a little bounce, okay? This is called the pullback. It's a pullback to the upside. As price bounces, it starts to go higher and eventually touches and intersects the downward sloping midline. But ultimately, we have a bar that is entirely above the midline, and the three Donchians are still headed lower. So this is going to be our setup bar, all right? Now, where do we enter? Well, the basic format says we enter one tick, 1 pip or so below the setup bar, which is right here, all right? Does it have to close there? No. All we have to do is trade there. As you can see, the very next bar, we did trade there. It didn't close below. In fact, at the end of the day, you had a loss. It doesn't matter. That's okay. The trend is telling you that it's most likely going to continue lower. So you would have entered right there and a nice trade in the next following 10, 12 bars, okay? So you have the basic premise of strategy number 1 for entry. Remember, we're not giving you the complete rules. That wouldn't be fair to the people who purchase strategy number 1 course. I know a lot of you are saying, this is great, Steve, but where do I get out? Where do I place my stop? How do I track this? That's all included in the course. See, this would be comparable to going into a restaurant and someone, the owner of the restaurant, saying, thank you so much for coming tonight. Let me give you a free appetizer. And once you finish the appetizer, you would say to the owner, oh, well, thank you so much. I want my meal to be free as well, okay? And the owner would look at you and say, I just gave you a free appetizer. I can't give you the free meal. That would be fair to the rest of the patrons in my restaurant who just purchased the full meal. It's the same way with our presentations. I just gave you a great appetizer. I can't give you the full entree, okay? But it shouldn't be that difficult. If you've been trading for some time, anywhere, let's say you placed your stop above here, a basic stop, okay, above the high. Well, whatever the risk was, if you just simply wanted to double that, that could be your exit point. It's a very simple process. It's up to you. All right, so let's look at some examples because this is how you get a better understanding of how this works in different applications in different environments, okay? All right, so let's start out here by looking at the spiders. Once again, this was the very first example we shared with you. Most students would have said, well, Steve, this is a bearish engulfing pattern right at the top, okay? At the same time, that blog I subscribe to says the market just topped out. We've been going up for some time now. So look at the amount of days we closed at the low, okay? This $10,000 course I took says that's a very negative sign. So you've got to be very negative on the S&P 500 because the spiders are really showing a clear momentum to the downside, okay? Just see how everything I made my observations on and justified the market was based on what someone else or something was telling me, not what the market was telling me. Because the market was basically telling me that it's in an overall uptrend because we have the 21 period Donchians all headed in the same direction. So this is actually, instead of a downtrend, this is an opportunity to buy. Is it going to be 100% foolproof? Absolutely not. You will have losses from time to time, but you've increased your odds for success because you are part of the process now. You are deciding on your own. You're not going to a chat room and listening to what everyone else is doing. You've stopped listening to the guys on TV to find out what to buy or sell, what they like. You don't even have to look at earnings if you don't want to because it doesn't matter. All that matters is what the price chart in front of you is doing. Okay, so by adding a little structure in the form of the Donchian channels, we now have a clearer idea of what the market wants to do. We've put some brackets around it, and it's telling us that even though we have a sell-off going on right now, the overall trend is still up. So that is the definition of a pullback. All right, so as we see here, price was starting to decline. It touched the middle line, and now it is completely below. So what is that? That's our setup. So on the 8th of March, just about 3 weeks ago, we had a nice setup to go long the spiders. And we could go long once we traded 1 or 2 ticks above. As you can see, we would have entered the very next day and 8 points in the following week. Now we know that 8 points isn't a lot, and we know that a lot of traders can't trade the spiders because they're very expensive. But guess what? That 8 points represented 650 Dow Jones Industrial points. So the market went up 650 points in the next week. So let's say you could use this as a market timing tool. All right. So if the spiders, the ETF that represents the S&P 500, was saying that it wanted to go higher off this signal, well, maybe that gave you the confidence to buy that stock you were looking at, or maybe you wanted to buy some options in something else, or maybe you wanted to buy, some options in the spiders. So lots of ways to look at this and trade this. Am I telling you the right way to do it? No, there is no right way. The right way is when you make the decision, not me. I'm not going to tell, if you've come to this webinar thinking, well, I'm going to tell you what to buy or what to sell, you've come to the wrong place. If you go to my Twitter page thinking that I'm going to tell you what to buy or what to sell on a daily basis, you've gone to the wrong place. We don't believe in that because that would be doing you a disservice. I would basically, once again, be doing the same thing that the entire industry does, which is force you to be out of the game and force you to be a robot and just simply do what I say. And that's what kind of a mentor would I be if I were teaching you how to trade that way? I'm doing the opposite. I'm trying to put the power in your hands so that you don't have to rely on those things anymore. 40 years ago, I stopped looking at fundamental news. I stopped looking at earnings. I stopped going to, we didn't have chat rooms then, but there were newsletters. I stopped reading those things. I stopped looking at what the institutions were doing. And guess what? All of a sudden, my trading started to become consistent. So that's the specialist edge. This is the same edge I'm trying to instill in all of you. All right, so let's look at some stocks. Now you have the process under your belt. Let's look at some stocks, okay? Here's XLNX, the same process. We're selling off as the Donchians are rising. We have our setup right here. If you would have entered on the next day, remember, we opened up higher. Even though that gapped up, it's your choice whether you want to take it or not. Even if you had taken it, you still had a 7-point gain in a fairly good run in the next week, okay? Let's look at WP. This was at the end of December coming into this year. All Donchians are headed lower. We have a nice bounce here as price rises. It intersects the declining Donchian channel, and here's our first bar completely above. So you want to sell once price trades 1 tick below, and had you gone short at the beginning of December, 16 points potentially you could have captured. We're not telling you you would have made 16 points because, once again, everyone trades differently. We want you to trade. In fact, we encourage everyone to trade differently. Some of our traders could have taken this and said, well, I bought the puts. I made a quick 2 or 3 points and I'm out. Someone could have said, no, I held on. I used the other exit where I was staying as long as possible. That's fine. There is no wrong way to exit. The only wrong way is when you listen to someone tell you. Here's an example in NTRS, same thing. We had a nice declining pullback. You would have entered right here. And remember, this is where we say it does not require that the stock or future or whatever you're trading close above. As you see here, you would have entered, and where was the close at the end of the day? It was below. Most students, beginning students, would have said, well, Steve, this doesn't work. I bought it and I closed lower. I have a loss on the day. That's silly. That doesn't matter. We're not trading it to have a profit at the end of that day or any day. We're trading it to get in at a very low, high percentage point. As you can see right here, look what happened the following days, okay? So don't worry about where it closes on that first date. As we look at XOM, this is what we call a double signal. Now, had you taken this signal and held on, you could have potentially captured 17 points. If you're the type of trader that likes to get in and out quickly, you could have captured roughly about 5 points here, taken this one again, and then captured about 5 points. So it's up to you how you want to trade it. But these were two very valid setups generated using the same principle I just taught you. How about Apple? Okay, well, this was on the, I believe, on the 12th of March, a couple of weeks ago. All three downtrends are headed higher in the same upward direction. We have the sell-off here, where most people would have thought, well, we're rolling over to get out of Apple. This was a perfect setup. You would have entered on the opening of the next day, which was much higher. So you have the decision whether to take that or not. Had you taken it, well, potentially you could have captured 20 points coming into the end of March. Here's an example in FIZZ. Okay, as we can see here, the downtrends are headed lower towards the end of the year. As we bounce, a lot of people would say, well, Steve, this was a great bounce here. And look at this low was not confirmed. You had a divergence here by all the indicators. I took this $10,000 class. And plus, Steve, all the institutions were buying here. So why would I sell? Well, because those justifications are based off of someone or something else. I don't look at the institutions. I don't look at earnings. I don't look at divergence because there's no consistency in those things. Sure, they'll work every once in a while, but remember, it's about being consistent. You know, I want you to be trading 20, 30, 40 years down the road. I don't want you to just have a couple of good trades and then give it all back. How many of you have bought these programs, $5,000, $10,000, where sure, you have 1 or 2 good trades, but most likely over the course of time, you're not making any money, you're losing money. That's what we mean by an inconsistent method. What we want to do is share with you something that is consistent, all right? Consistency means you will have losses, but you'll be able to recoup those losses and still be ahead. That's what we're searching for. Strategy number 1 is a very consistent method. So where everyone would have been buying here based on some great news, we're just waiting for this sell here. We would have entered and potentially could have captured 30 points coming into 2019. As we look at Netflix here, this was on March 11th. Once again, a buy setup was generated. 24 potential points you could have captured in a week coming into this last week of March. Now, Triple L, this is a great example of how using our confirmation method to get in can help you get you a better price. As we see here, the downtrends are headed lower. Here's the bounce. Here's our first bar that is completely above the declining. So you would have entered somewhere down here, all right? But you never entered. And the next bar is still a valid setup bar because we're still headed downward to the downtrend. So you would have entered somewhere here. Well, you never entered, but the next bar, a little bit higher, just by a couple of ticks or so. So you move in your entry point higher, so you're getting a better entry point. You could have sold and potentially, coming in to the end of the year, captured over 30 points in just about a week's time in Triple L. You think you could have done okay buying some puts? It's entirely up to you. All right, so let's look at an entirely different market, the E-mini S&P futures, because we don't want you to think that this only works for stocks. This happened in an hour chart of the E-minis. This was in the middle of March, just a couple of weeks ago. The same process. Nothing changes because we're looking at a different market or a different time frame. The Donchians are headed upward in the same upward direction. Remember, they're not in sync. As this is going sideways, these two are headed upwards. So don't get confused and say, well, they're not in sync, so I guess it's not headed. No, if it's going sideways, just look and see where the past setting was. The setting was lower, so that means it's still headed upwards. Okay, until one of these actually heads down, that's when the setup is negated. As you can see, they're all going sideways at this point. Does that mean the trend has stopped? No, it just means we're in a pause and the setup is still valid. We touch the line here, and now we intersect it again. Here's our first setup right here. As you can see, you want to buy right above that, but we never traded there on the next bar. That's okay. The next hourly bar was lower. It's still a setup. So now we can purchase even lower. The setup is still in place. So you would have entered on the next hourly bar. This was on March 12th. And potentially in the next day, if you held a position, 32 points potentially you could have captured. That's $1,600 per contract. Okay, it would have been a nice one-day profit there for one contract in the E-mini, $1,600. That's at an hourly chart that happened a couple of weeks ago. Let's look at a 5-minute chart that actually happened just last week on the 22nd, 23rd of March. All right, even though the chart doesn't go back, all these Donchians are coming from a higher setting. In fact, you see right here it even went down a little bit. So this is all valid. We're looking for a bounce. Now, as you can see, this very first setup right here, let me share with you this one. Had you been the type of trader where you like to, what they call, just get in and out quickly, or basically just a scalper, someone who's scalping for quick profits, well, you could have actually used this as your setup right here, sold it, and maybe taken a quick profit. But had you not, let's say you had waited for a very nice profit, this would have been most likely a loss. If you put your stop here or above the last pivot high, you most likely would have been stopped out for a small loss. That's okay. This is what we mean by consistency. So don't think that just because you have a loss, this doesn't work. Or maybe you have 2 or 3 losses. That's okay. If you keep your losses to a minimum, which we provide in the course, we show conservative and aggressive type stops. It's entirely up to you which one you want to use. If you decide to be very conservative and keep very small stops, sure, you'll have some small losses. But look what happens after that. The very next setup, you have to get back in, would have generated a nice profit, and potentially you could have captured in the next just 5 or so hours upwards of 40 points. That's $2,000. So do you think in that $2,000 potential, you could have made back what you lost on the first setup? I think so. This is what we mean by consistency. Don't be afraid of losing. If you keep your losses intact, if you keep them very small, the process is to be able to recoup those as fast as possible. Let's look at the Forex markets. We have some currency pair traders out here. Nothing changes because we change the market. Nothing changes at all. Here is a daily chart of the British pound. This was the first week in March. The same process. We're all headed higher. Now, this chart doesn't go back further enough, but it's still headed from a higher direction. We see it coming up here again. As we decline, we intersect the midline, and now we are entirely below it. You could have purchased the British pound on the 11th of March, 350 pips in the next 3 days. That's about over $3,000 per unit if you had traded the British pound on a daily chart. If you go to a daily chart of the New Zealand Canadian dollar, well, it's the exact opposite. The Donchians are headed lower, even though this chart doesn't go back further enough because I wanted to show you. It's coming from a higher place. So this bounce here intersects the declining midline, and now we have our first setup right here. Once again, this is what we mean by consistency. Had you taken this very first setup here to go short, let's say you place your stop here or maybe a little above here, most likely you would have gotten stopped out on this bar. That's okay. Jump right back in on the very next setup, and look, you made it all back. If you stayed in long enough, you would have potentially covered your loss. This is what we mean by all of our methods being very consistent. And then lastly, commodities. We know that a lot of traders, if the markets ever turn very negative, they switch onto real tangible things like commodities. They don't want to be in stocks. If we head into a very strong downward move in the market, they want to be trading something that's real, that's tangible. So a lot of traders will ultimately switch to commodities, okay? Does anything change because now we're looking at crude oil or coffee? Absolutely not. Wherever you have trends, it makes no difference. We're just simply going to ride and look for pullbacks within trends. For example, here's a chart in crude oil. All right, this happened in mid-February. Which direction are the Donchian channels headed? They're all headed upwards, okay? So even though we have this sell-off, this is called the pullback. We have a bar completely below. We would have placed our entry right here. Nothing happened. So we move our entry down here in the middle of February and coming into the middle to end of March, 6 points in crude oil to the upside. Okay. How about cocoa? Nothing changes because we're looking at cocoa. The Donchian channels are headed lower. We wait for a bounce. As price bounces, we have our first bar that is completely above the Donchians. We have our next bar. Here's our entry. And 165 potential points to the downside. Okay, so let's recap before we go into questions and answers. Remember, this is a very consistent pullback strategy. Consistency means you will have losses. That's okay, but you want to be able to recoup those losses. You can apply this to stocks, E-mini futures, Forex, and commodities. Now, you can also apply it to different exchanges. We have traders who trade this on the DAX exchange, on the Canadian markets, on the Indian markets. It makes no difference. The setting that we're looking for is a 21-period Donchian channel. If you don't have it on your current platform, ask your tech support to put it on there for you or to be able to refer you to where you can find it. This strategy can be applied to any market, any time frame, and any direction, as you just saw. Even if you want to trade intraday, I showed you 5-minute charts of the E-mini. Some of our students trade this on tick charts, on 500 or 1,000 tick chart bars, okay? But please, learn this strategy first. And how do you learn? By paper trading. You must practice first. So many times students will get back to me and say, Steve, I traded this. The first 10 trades are all losses. This doesn't work. And then I ask them to submit their work and their examples. And then I see that each and every one of them was applied incorrectly. They have the wrong setting on the Donchians. They're applying the entries wrong. They're not implementing the rules correctly. So please, paper trade it first. Remember, our edge here is consistency. You will have losses, but if you keep them to a minimum, we're confident that you'll be able to recoup those losses. Now, before you ask me questions, I want to ask you one. Do you think this strategy could have helped your trading this past year? Okay? We're already going to be starting the 4th month of the year. How have you been doing so far? Do you think the strategy could have helped? Most of the examples I shared with you are not 2-3 years old. They just happened within the last month or so. Many of them happened within the last week. We have a great offer for you today. For all the attendees today, we have a special Saturday discount. We're going to offer you strategy number 1, the entire course. I know a lot of you have been wondering. I can see some questions already. Steve, this is great. Where do I exit? Where do I get out? Remember, that's entirely in the course, okay? So the Donchian channels are going to be there for you. We're going to have it pre-canned for you with the I'm trying to think of the word, with the settings we give you. These are all the add-ons. That's the word I was looking for. It's actually 2 words. We supply you with the add-ons, and we give you all the complete rules. In fact, we have an aggressive and a conservative version of strategy number 1 that you can apply to any market. This also comes with educational correspondence. You're going to get all of the aspects of how to trade strategy number 1. But we're not going to stop there, okay? If you don't have the capability to get the Donchians, if you don't have them on your platform, if you're new to trading, if you don't know where to find them, we have a great extra bonus for all of you today. We're going to include 6 months of the PTS Primo charting platform free. All right, this comes with the course. We've never done this before. You're going to get 6 months free. And the reason why this is such a great bonus is because strategy number 1 is completely formatted on the platform. There's nothing you really need to do. If you don't have the 21-period Donchian channels, guess what? It's already formatted. All you have to do is click on the strategy. You'll get automatic buy and sell setups where they have been generated. You'll also get the pre-formatted 21-period Donchian channels. Everything is right there for you. But remember, this is for educational purposes only because this platform teaches traders how to trade. We're not just trying to once again be like everyone else and just say, there's no reason for you to really learn how to trade this. We'll just supply you with the up and down arrows. No, you learn in the course why a setup is being generated. And then you can check with the up and down arrows to check your work to see if you've properly identified a setup. Once you know how to identify a setup, you don't need the arrows anymore. In fact, I don't use them because I know exactly where the setups are. We want you, each and every one of my students, I want to get to that point. But we're not going to just stop with strategy number one. Obviously, you're going to get all of the pre-canned applications for strategy number one on the format, but it comes with much more. You're going to get advanced buy-sell line features. I've talked about this in other Saturday webinars, which is our great tool for defining the overall trend. It comes with 4 different ways to define this, and that's also included. You're also going to get the strategy signal scanner, as you see here highlighted. Let me show you what a great tool this is. Okay, I've told you in past webinars that my pet peeve is by using these different platforms and applications before in the past, since I've been trading for 4 decades, and seeing how complicated they are. Sometimes it's taken me over an hour just to figure out how to pull up a chart. I specifically designed Pro Trader Strategies, and I designed the PTS Primo charts so that it could be extremely simple, so that you wouldn't have to waste your time and energy trying to figure out how to get a chart, how to get the signals, how to scan for setups for the next day. In fact, let me share with you how simple it is to scan for strategy number one signals. On the strategy number one drop-down tab right here, you would simply click this on, and a drop-down menu appears. You just click on scan, and this window will appear. Okay, so you click on the load symbols. We provide you with a symbol list. A window will come up saying, do you want to choose the S&P? Do you want the NASDAQ? Do you want commodities, E-mini futures, currency pairs, Bitcoin, just about any market you can think of, Indian stock exchange, Canadian exchanges, whatever one you want. In fact, you can create your own stock list if you want, certain markets you look at on a nightly basis, and they'll automatically appear like in about 10 seconds. The spreadsheet will appear. Then all you have to do is click on scan, because it knows that you're scanning for strategy number one. And in about 30 seconds, you'll see a series of green or red horizontal bars. The green bars mean there is a signal in that corresponding stock to buy. The red ones mean there's a signal in that corresponding stock to sell. It's that easy. So if you have to work, you can come home at night and see what the next strategy number one setups are going to be for the following day. And you can decide if you want to trade them or not, want to buy some options. It's entirely up to you. So that comes with this, also included with this 6 months offer. You're also going to get the over 90 of the most prominent technical indicators. You're going to get the Bloomberg TV feature. This is a great feature we have as well. We have an icon that all you have to do is simply click it on. It's our media page icon. You'll get live, free, fundamental news. We know that fundamental news is not a requirement of any of our trading, but if you feel that you must know what the earnings reports are going to be or what the economic reports are going to be, we have it here live for you on the media page. And then lastly, this all comes with personalized tech support. If for any time there's an issue with the actual platform or pulling up a chart or the scanner, we'll be there in a matter of moments to resolve it for you. Okay? So you're going to get strategy number one along with 6 months of the PTS Primo charting platform. This is our most consistent pullback method. You're going to get all the entry, exit, stop placement rules. You're going to get the aggressive as well as conservative versions which to trade it. This comes with the complete Donchian channel settings. It can be applied to any market, any time frame, any direction. And this also comes with educational correspondence from yours truly. In other words, you get my personal email address. You can contact me whenever you'd like. If you sign up today, you'll get access to the course today, and you can email me this afternoon, and I'll be answering any question you may be having. This is a great, great offer. Now, the Saturday morning discount is as follows. If you purchase these separately, if you purchase strategy number one along with 6 months of our platform, it would normally cost you close to $1,600. We don't want to charge you that just for coming to a presentation just so that you have to buy one of our most consistent methods. We're going to slash that price. Remember, we're not going to charge you anything for the platform. We're just going to, today only, charge you $695. That's a savings of close to $900, okay? $695. Now, even if $695 is too large of a sum for you to come up with, contact Pro Trader Strategies. They can still put together a payment plan with you. So for a small deposit, you can be paying off that $695 if you want. So we have lots of great options for you to take so that you become a student of mine. Trust me, we're already into the first quarter of 2019. A year from today, you will have wished you became a member of this course. You don't want to be where you are a year from now and say, gosh, how come I really haven't progressed? I've spent so much time, so much energy, so much money, and I'm worse off than I was a year ago. I strongly feel that we'll be able to get you on that road to consistency. by becoming a member of the Strategy Number 1 course. So here's the offer we have today. This is the information. Contact Pro Trader Strategies. They handle all of our discounts and all of our tech support. You can email them. You can call them directly at the number there, or that link you see at the very bottom will take you to give you more information on the sign up on this. Now, we've posted the link on the chat box because the link on the screen is not a live link, but the chat box has a link that has been posted. Just simply click that on and it will take you for the informational page for this offer, okay? Now we have about 10 or 15 minutes left for any questions you may have. I'm going to leave this information up here on the screen, and I'm going to open up the question and answer box. So if you have a question concerning anything I went over today, feel free to send it right now. Let's see, Gordon asks, use Keltland channels. Is that just as good as Donjon channels? This is probably one of the most common questions I receive with this. You know what? I have tried to replace this because in the beginning, before we had our platform, a lot of students would say, well, Steve, I don't have access to Donjon channels. Can I use Keltner, or can I use advanced or revised setting of the Bollinger Bands? And my opinion is no, because you just won't get the same results. Now, I know a lot of students have resulted using Keltners, and they've got back to me as well. I've experimented with Keltner channels. They don't give you the same results because of the way they're formatted. You can try this, but trust me, I've been experimenting with this technique for 30, 40 years now, and the best setup is the 21 period Donjon channel. It just works so great with this pullback, and it makes things really easy. Remember, if you become a student of mine with this, you're going to have the Donjon channels pre-formatted. So all you have to do is click on indicator, and they automatically come up already set. So that's why we made it so simple for you, okay? Second question, is this strategy good for intraday? Sure, I use it intraday. I showed you a couple of examples intraday. I showed you an hourly chart and a 5-minute chart of the E-minis. So if it can work on the E-minis, you can use it on a 10-minute chart of stocks. We have a lot of students that use this on intraday trading for currency pairs. It's entirely up to you. But yes, wherever there is a trend and wherever there is a pullback, you can apply this. It makes no difference what direction or what time frame or what market. Next question, does this work for swing trading? Yes. In fact, most of the examples I shared with you today are all swing trade examples. As you saw, a lot of those stocks, you would have entered, and then once you got in, you had a really nice swing at the very bottom. So yes, this works really great with, remember, swing trading is just really requires you to apply it to a daily or a weekly chart. So that's where you get these nice swings off of the pullback. So yes. Do I need to spend hours in front of my computer, or can I get automatic buy and sell commands after the market hours? Well, firstly, remember, we don't want to take you out of the game. If you were here in the very beginning of the presentation, the great disservice of the entire industry and most teachers is that they present you with a plan that takes you out. And so that goes against our entire principles, our entire philosophy of specialist trading. I don't want to just give you a black box and say, oh, it will automatically produce signals for you. You just have to enter an order and walk away. My goal as your mentor is to teach you what to look for. So the first process is not to worry about if it gives you automatic signals or how long you have to be in front of the computer. The first question is to answer, are you willing to learn? And it's a very simple method. I've just given you the majority of the rules right off the bat. So if you think this was fairly simple, you've just about gotten the majority of the rules. It's a very simple strategy to learn, but it takes practice. So I want you to learn this first, and then it's up to you. We have some students who like to be in front of the computer 24/7. We have other students who like to enter an order and then walk away. It's up to you as to how much you learn and how you want to trade. But remember, this is, depending on what time frame, depends on how much time you have to spend in front of the computer. In other words, I would not suggest applying this to a tick chart and then walking away. You have to be in front of your computer for smaller time frames. But if you're trading swing bars, daily or weekly bars, sure, you could enter an order, place your stop and your exit, and then walk away. It's as simple as that, but it's up to you. I'm not going to tell you how to trade. Once again, that's a disservice if I tell you where to buy and where to sell, and I tell you to walk away. It's entirely up to you what you decide. Our goal is simply to provide you with education. If you want to stay in front of your computer, if you want to walk away, that's your decision, okay? But you can do that with any or all of our methods. It's entirely your choice. Okay, it's completely feasible to trade it either way you'd like. Okay, good questions. Remember, if you want to make trading simple, the offer we have today, the $695 purchase, along with 6 months free of the platform, I can't think of a better way to learn how to apply this. Everything is pre-formatted there for you. You get the 21 period Donchian channels, you get the rules, and you get the entire course, and this comes with educational correspondence. So it's a great way to learn to put yourself back in the driver's seat. Remember, we do not want to turn this into the way the entire industry does, which is basically furnish you with buy and sell signals and say, thanks a lot, there's nothing you need to do, you're just a robot, just enter the orders. That would be doing you a disservice, and that would be a recipe for disaster. That's why 85% of all traders fail, because you're not making your decisions. I want you to make your decisions. I'm not here to tell you how to apply this, whether you should stay in front of your computer or not. I'm not here to tell you what time frame. I'm not here to tell you whether you should buy options or buy stocks. That's entirely up to you. I'm simply here to educate you so that you can decide these things. Okay? A good mentor does not trade for you. He teaches you how to trade. That's what I'm trying to do for all of you, so that, I don't want you just to have one great month and then give it all back the way so many other systems do. I want you to be trading 10, 20, 30 years down the road. So that's why I'm trying to educate you, okay? As we conclude here, remember, if you have any more questions once we've concluded, feel free to contact Pro Trader Strategies. They have trading consultants manning the phones right now. They would be happy to answer any question about price, about questions about the platform, about tech support, or even about setting up a payment plan. They would be happy with absolutely no obligation. You don't have to purchase just because you contact them. They would be more than happy just to answer a question you have. So please, give them a call if you have another question. And as we close here and take one last look at our disclaimer, please remember that our goal is simply to educate you. As your mentor, I want to educate you so that you can join the rankings of the traders who are consistent on a favorable basis. That's what I want to do. So I hope you got something out of this today. Remember, you have the entry rules to this. Please paper trade if you're going to use this. If you have access to the Donchian channels, please paper trade first, okay? And in closing, once again, thank you for attending today, for taking time out of your Saturday morning, and I look forward to all of you becoming students of mine in the Strategy #1 course. Thank you so much. I'll see you next time. Bye-bye.